Good morning, guys, and welcome to today's edition of the London Session Open. Today is July 30th, 2020, and my name is 𝗿𝗲𝘁𝗵𝗹. I'm the Chief Market Strategist with ATFX UK. Let's take a look at the markets. We're having a bit of risk-off. Stock markets are a bit softer. Japanese stock market, in fact, triggered double bottom, looking to be bearish. And you have other markets as well, like the Spanish market going down a bit. You have US stock markets holding up well for now, but they're actually forming some quite interesting patterns that suggest lower prices ahead. So it's actually quite interesting, the current situation, and hopefully we can get some more action. Okay, good. Let me just double check something here. If you are watching this live, just, great. If you want, you can put just a simple hello in the chat box or something like that. Audio should be fine as well on your end now. Okay, good. So let's get going, and we're gonna begin. Let's begin a bit and talk a bit about what I mentioned just now. We're gonna begin actually with the S&P 500. So the S&P 500, had a nice little bounce. Okay, so over the last few days, I've been saying that people can buy here if they wanted to, and the market did indeed rise. But if we look at all the details here, you have a bit of a head and shoulders, alternatively a descending triangle. And I think the descending triangle is probably what makes the most sense. You could, if you wanted to, just hook these levels up like that, and then take out this low here, 31.94, which happens to be all this low here. We'll trigger that, and it will give you a target of about 31.14. But for now, the trend is bullish, so I wouldn't really be going out and short selling this market now. But you can see here how, we could slide lower here. And the general idea over the last few days has been to buy here. So far, it worked out fine. But look at this. Let me show you if I can load the Japanese stock market. So this is the Japanese stock market. And you can see here that on this 6-hour chart, you had a low here and another low here. This is July 10th low. This is the July 24th low. And you have now, some people call it, I think, like a rounding top or something like that. It's also could be interpreted like a double bottom. And if it is interpreted like a double bottom, then it does suggest we could trade lower. And suggest we can go as low as maybe 21,438. And this is going to remain bearish as long as you trade below 22,600. Now, if you look at this from a 1-hour chart, the actual sell-off started here somewhere. Ideally, we get a little bit of a pullback, but there are risks, of course, that we could have missed this if we wait for that pullback. But this is the 5-minute, right? So the sell-off started here. This is like 6 a.m. So this is sort of the London session high, and then it came off a bit. But yeah, might go up a bit. Ultimately, though, like as long as you trade below 22,251, if we get like a close below that level, this would be a sell pattern. While we're talking about stock markets, let's take a look at the NASDAQ 100. This is the NASDAQ 100. So the market now is starting to mature more. We're starting to have more mature patterns. So I know some of you guys have been trying to sell and stuff like that. My idea has been, to be bullish as long as possible, and we managed to get this from here actually, I think, and from here, and then we slid, and then we did try below trend defining level, but then we managed to go up again. This is the NASDAQ 100 for now. Actually, still remains like an uptrend. Of course, from a fundamental point of view, one might argue that we should be much lower, and yeah, maybe you're right. All those people are right, but for now it still remains an uptrend. But again, things are sort of lining themselves up with the Japanese stock market and the S&P 500 and so on. So I would rather be looking to sell than looking to buy. But you could, in the S&P 500 and in the NASDAQ 100, you could buy if you want to. There's nothing wrong with that, because you're trading with a trend, and that's the best thing, really. Not really because the market has risen so fast, or because of COVID-19. So I was doing some analysis, and on the S&P 500, to give you an idea about that, on the S&P, people were like, this is the daily chart now. Just get rid of everything. So on the way up, people were short, the average CFD trader. Then when we start to fall somewhere around here, So just after a tiny bit of gain, they all start to pile in, and they buy and they buy and they buy and they buy and they buy. And then we go up, and then from here somewhere, from April, they're all short. So they're pretty much all short all the way up. And it's difficult to find data directly for the NASDAQ 100, like historical data like that. But it's the same was true for the S&P, the same is true for the Dow Jones. So I'm sure it's the same for the NASDAQ 100. So don't try to be too clever about it. There's so many people here trying to be clever about it. And they were long on the way down when the market was sliding, and they were short on the way up. That's not the way to make money. The way is to try to trade with the trend as a retail investor. If you're a long-term investor, and that's maybe a bit of a different ball game, but even long-term investors, what they try to do, they don't go out and short the NASDAQ 100 directly. They try to buy shares, and they buy a solid company because they think that, you know, this company is, you know, something that produces a nice dividend every year, a nice profit every year, and it's gonna weather this slide. And you know, the NASDAQ 100 did gain with about 60%. And yesterday I was talking with a guy that said he made about 100% return on his portfolio, which makes sense. You know, the NASDAQ is up with 69%. You know, if you would have taken, and this is 100 shares, so if you just grabbed a smaller amount of those shares, your volatility, or sorry, your volatility, your portfolio is going to increase, but obviously you're going to get more returns in a bull market like this. So yeah, so what did we talk about so far? We talked about the fact that you got the Nikkei 225 turning bearish. I also mentioned the Spanish stock market turning bearish. I mentioned that the S&P 500 is bullish for now, and the NASDAQ 100 is also bullish for now. But at least on the S&P 500, we have what looks to be like at the beginning of the end, but we're not there yet. So I wouldn't get involved until we take out this level. Now, if you just want to go with the trend, and believe me, it's usually better just to go with the trend and to prove otherwise, then we continue to just buy around these low levels here, looking for a push to the upside, because we might just go upwards. You know, things might calm down, and then people suddenly, you know, are bullish again. Let's take a look at the German DAX. So this is your German DAX. I don't really know exactly why the market is falling the way it is today, but it's moving now sharply. My view a few days ago was to buy here and here, I think, but we did get stopped out. And then since then, I've been just watching this, and it's been going lower and lower and lower. And I wanted to wait because what happened here, which is quite interesting as well, is that you saw money, you know, indices, you know, great trade. You know, we had that very nice case that we've been working with here that, you know, the market is going to reopen, we're going to see good economic data, let's try to buy stocks. So we had that very nice rally in stocks. And then we were at the same time here on this show focusing on gold, and gold, as you know, and silver just did really good for us. And then now lately things are starting to shift to cryptos. At the same time, Bitcoin, the German DAX and all these markets have been very, very quiet because they're waiting for clues. And now we're starting to see some of these clues, like today with the German DAX coming down and with some of the other markets coming down. But we're not in a full-fledged bear market yet, but we're definitely on a downtrend, but we're definitely in a short-term downtrend. Now looking at this today, we have a big bearish candle here. Clearly something has happened in Germany that I'm not fully aware of, and I would wait. Like, there's no reason to make any strong decisions here right now. If one wants to trade, you got the S&P or you got the Nikkei 225. That's where I will be focusing on, because this is riding straight to support. And so selling here at support is not the best things to do. At the same time, we might actually just go up here. So the risk-reward ratios here is not good either. Say you sell at this spot and you have stop loss there. Like, even if we slide down here, your risk-reward ratio is going to be poor. Like, you will be looking at maybe 1.71, but it's more likely it's going to go up. So if you're really ultra bearish, you could maybe do something like this. Let it bounce so it recuperates 50% of today's loss, and then short with stops on the other side and then slides. But then again, this is not a mature pattern. In the S&P 500, you have a better mature pattern, and over the next few days, one could sell here potentially, stop on the other side. Alternatively, as we just talked about, the Nikkei 225, it already had that trigger. Now, let's take a look a bit at gold and then crude, and then we're going to take a look at currencies. All right, so this is gold, and a few days ago we said look to buy down here for this market to go upwards. It went far more higher than I thought it would do. It went all the way up to the high, which is awesome. You know, if you did buy here, congratulations, pat yourself on the back, because this was a good trade. You really nailed that very low point. And looking at this today, I have tightened the stop, as you can see here. So before it was down here, now it's here, and this is still a healthy uptrend. Whatever anyone might tell you is still an uptrend. Whatever might say, oh, it risen too fast. Yeah, it probably did rise too far. But gold is what Bitcoin used to, gold is like the Bitcoin. Used to be the Bitcoin in the past. Like here from 2009, all the way 2010, 2011, 2012. That's when the whole thing peaked here. And this was the golden times of gold, where you could just buy and it was going up and up and up. And I remember that because I was working already as an analyst and I was already trading at that time. It was relatively easy to understand the markets. You just buy dips. So I'll continue to be bullish here. Hasn't risen quite a lot, quite fast. Of course it has. Can have a shakeout. Of course it can. We had shakeouts in the past like these ones here. And this looks very much like something like the Euro USD, where Euro USD just moved up and up and up and up. So obviously everything is a bit overstretched right now and the dollar is really weakened. All right, here is West Texas crude oil. And I will put this, I would ignore it for now. I wouldn't get too involved with this one right now. It's had an attempt to break higher at one point. You know, it pushed upwards, but the ascending triangle never really managed to trade much higher. I mean, it went up a bit and down and up and down. So it's a bit of a messy market right now. What might happen is if we take out this level again, we might push upwards. And this line might hold, it might not hold. But I think within this level, which is 39.72 and 41.86, we trade sideways. And then we'll see what happens, okay? Let me just check something here before we continue. Okay, good. All right, good. Let's switch to currencies. All right, this is your Euro USD. And this one has been moving so fast, I haven't been able to, you know, get a decent pullback here to work with. My idea has always been to get a good residual entry, and I stand by that. That's super important. Not chasing markets. And I've been waiting for markets this to come down, but it really hasn't. We can clear all of this now, and just looking at the daily chart, it's quite clear. You know, this market has rallied from this very low, is rallied with a nice cool 634 pip with really no strong pullback. From the yearly low, the market has gained with about 1,167 pips. I did some analysis, like you should all do that at one point. You should just measure sort of some of these moves, like how much can it go without any strong rally. Okay, this is 1,500 from the very low to the very high. You know, this is 2,000, but you see had some sort of a pullback here of some cool 500 points. And then here you have several of these sort of 1,000 and then 1,000 up, 1,000 down. So 1,000 is a solid move, and it's unlikely that it's not going to give us fight back a bit. So it's very likely that it will pull back. So that's really what I'm looking at. And we have rallied quite strongly on the daily chart. If you look at this, you don't really have any proper bearish candles or anything like that. Of course, take out the low here from July 28th, and we could probably start to go a bit lower here. But I prefer many times to wait for some proper pattern, and we're not really seeing that right now. Now, if we look at this from a 1 hour perspective, you're still sort of rather bullish. It is bullish, much like gold is still bullish. So I'm going to insist to remain bullish with the dip, and go with the flow here. But as you can probably guess, this is not really what I'm focusing on today, because of the overbought conditions on the daily. I'm gonna leave it like that. This is a 1 hour chart. That's so close I have to be to try to make sense of this market. Take out this low, probably go down to 1610, be above this low, and people probably buy and then attack the high. GBP versus the USD as well. I've been looking for this to go higher, but it really has sort of struggled to trade much higher. And yeah, I'm gonna continue to be bullish for now. What's interesting actually is the GBP USD, or GBP, has done very good against the New Zealand dollar. and then I think it rolls against 2-3 other currencies as well. But I missed out on that one. Those reversals happened, I think, 2-3 days ago. All right, what's the plan here then? Let's just focus on the 1 hour. If we come down to these levels, it might be worthwhile looking to get involved, looking for this to head upwards like this. But I wouldn't really push it too much. But this is what it is. Attack the high afterwards, and then maybe on the 6 hour. So we're here right now. We just took out that high, and you have, you know, sort of this level here, and then you have this level up here. All right, let's take a look at cryptos really fast, and then we're gonna try to answer a few questions. So if you wanna have questions, just put them in the chat box. All right, here is Bitcoin. Do you remember this one? We've been saying looking to buy here. Obviously, you would only have bought there if you were like a big crypto coin enthusiast. And if you did buy there, congratulations, you had a killer risk reward ratio. Let's see what this would have been. This would have been a risk reward ratio of 4.88, at one point almost 5.77. It could be though that this market could potentially be on its way up higher. It has had many false starts though, and the biggest problem with this one is that it broke out of a triangle. Triangle are worthless patterns. They're not really, some people love them, and you see all these rookies and even experienced traders, they look so much on them. And yes, you can work with a triangle if you have like an overriding macroeconomic theme that tells you look to get involved or so on. But if you don't have that, I try to avoid triangles. And this has been a triangle that we tried. I think we broke this level here already in the past. We work with triangles so many times, and they usually don't work, especially not in traditional markets. Maybe a bit better here in cryptos. But now we did break out of this triangle. You know, this is the first triangle we looked at, but you can see you can easily do a bit of repainting. You do like that, and I'm sure you can do a little bit of repainting like that. So it's a bit difficult, but we are now breached that level. And if you look at this, you have high and a high, and it would have been awesome if we were going a little bit lower, because then you would have an inverse head and shoulders, and then we really would have been really exciting. But it didn't. So here we could potentially pull back a bit. I'm not saying we will pull back, because sometimes it's difficult to have a pullback. But if we do go down to 10,181, I think people are going to be buying. I think now one can tighten the stops to this low here. But in general, look for a little bit of a pullback, and then maybe a bit of an attack. The way it looks like right now, I think 1,320 would be what I would be targeting. Let's actually leave it like that. Okay, good. Let's see if you guys have any questions. If not, we're gonna wrap things up. We do have 5 more minutes, so if you have questions, just let me know. I'm gonna load the questions here so I can see them. Okay, so we have Cyberjet, good morning, and we have Grant W. Hey Alex, hey, how you doing? Good. We have Marvin, good morning to you as well. Get Trader TV, haven't seen you before. Thanks so much for joining us. And Marvin says, can we take a look at GBP CAD? Sure, let's take a look at GBP CAD. And by the way, guys, don't forget to hit that like button on YouTube there. All right, let's load GBP CAD. All right, so this is GBP CAD, and GBP CAD created on the 6 hour, you can see it actually triggered an inverse head and shoulders, and it's part of what I mentioned is that reversal in the pound that I missed out on. So you have that, you got yourself your head here. Actually, I'm not sure if you've seen this. There we go. So you got yourself, oh, that's not supposed to be there. So you got yourself the head here, left shoulder, right shoulder. And then you have the break to the neckline there. So this one suggests we can go upwards. And I think it was GBP New Zealand dollar as well. It looks very similar. This thing though has already moved quite a lot. So this is a daily chart. So the breakout happened on July 27th, 3 days ago. And then you had a proper confirmation on July 28th. Now we've gone halfway here. One can maybe book a better profits. And then on the 1 hour, I mean, you have a nice healthy uptrend here as well. You see we got up, down, up, down, up. I don't like to go so short term here, but you could potentially look for a little pullback, maybe to 7,350, 7,365, and then just looking for this to go upwards. If you're looking for more sort of solid setups, you don't want to be stopped out easily, you would look to maybe get involved around 7266 and then just being bullish above something like 7143, so just below this level like that. Grant W says poor GDP and employment numbers in Germany. All right, so that's probably the trigger then, as you mentioned, for the German DAX. Let's actually load that. So poor GDP numbers should not really come as a surprise. All right, so what are we looking at here? I'm gonna show you little print screen. All right, so this is the GDP numbers. So this is the year on year, which is probably the most important one. So second quarter GDP in Germany is the economy is lower by 11.7% compared with last year, which is obviously worse than the anticipated reading of 5.9. And sorry, this is the reading, anticipated reading. This is actually not too much of a difference then. And this is interesting. I wasn't really aware of this, but apparently first quarter GDP was not bad in Germany. So they actually done quite good actually. Like if you look at something like the UK, our numbers show that the economy shrank by 22%. Now, of course, the German economy is different than the UK economy because in the UK we're service sector oriented, whereas in Germany they're much more focused on manufacturing. And in places like China and Germany, I guess, you still had factories up and running. And obviously some car plants closed, but you don't close down a car plant forever. Whereas here in the UK, I'm working from home. I used to buy lunch out every day, like everybody else does. So, imagine all these shops and restaurants around there in the city of London, all the bars people would frequent after work, and just traveling, like all these millions of people that come to London every year. Now in London you can get a seat in the tube if you want to. You don't have to stand up, and the tourists are not blocking the roads. So yeah, so that's why we fall more further hit here. Okay, good. Let's see if you guys have any more questions. Otherwise, we're gonna wrap things up. Okay, so Marvin says thank you, and Shepard says I'm a newbie, and welcome to join us here. And I'm really happy that you're here, actually. So if you guys are new to this presentation, this is the YouTube channel, and in the bottom here, of course, you can just subscribe, click on subscribe, and this will light up, and then you can click on that little button as well here, and you will get notifications as we go live. Then you have the like button here as well. That's really important to share, because then it will send a message to YouTube that this is an interesting talk, and it will help to spread the word. As well, if you guys are new to the markets and you want to learn more, we have this website that I created. It's called Investing Cube, and on Investing Cube we have a lot of free content. We got a free trading course, we had coaching, we have the beginner articles. You started with the beginner articles if you have no sort of, you just want to know a little bit, you don't want to spend so much time. So you can check that out, and of course we have all the news on that website as well. Finally, we also have, you have the ability to book a consultation call with me. So I'll put that over here, and it's in the chat as well. Let's see if I can find it. There we go. So this is actually super easy if you're interested. If you want to have a one-to-one chat, you want to know more about ATFX and the different services and the services we have on Investing Cube, where we can try to help you. It's all for free, doesn't cost a thing. And all the services that ATFX and Investing Cube offer, they're all free. The way it works is that when you trade, you pay a spread, which is the same spread you're paying to your broker today. that spread, that's how they make their money, ATFX. So it is possible to book sessions with me, like 15-minute sessions. Just book here, and then I will receive a notification, and then I'll reply back to you and ask for your phone number, and we can jump on a Skype call or a normal call, and I'll try to help you guys. Okay, guys, have a beautiful day, and I'll see you guys on Monday for the next market update here on the ATFX YouTube channel. Thanks so much, and bye-bye.